step into the game. We're talking wood and grain. Charles bring the heat on Southern Yellow Pine. Mascot U.S. species, all is on the line. Gregg with the spruce, keeping knowledge defined. Ashen moderates, drops the facts in the booth. We on the buy, the sell ain't no hidden truth. Economics and trends, we got it all so clear. Lumber Word Podcast, best believe we're here. If you wanna make more, get in on the score. Join us every week, you'll be hungry for more. Love a big team, though. Whoop made known. Such rank Charleston. Slide, plum bram known. Open to the scene. For the lumber supreme. Charles laying down facts with that southern yellow bling. Mac got that U.S. swagger like strong timber beams. Gregg's insights on spruce, rewriting the themes. Got the buy side talk, we're stacking that flow. Selling knowledge, every week we still a show. Join the Lumber Word crew, let your business grow. For the sharpest minds, here's where the place to go.
Hey everybody, welcome to this week's episode of the Lumber Word. It is the 30th of July, 2025. Welcome everybody. We're excited. We have a guest on today, John Dolan, who's an independent market maker for the Case-Shiller Index. And it just happens to be good timing. Gregg yesterday was talking to me about the Case-Shiller Index outside of my office. And I'm like, Gregg, I have no idea what you're talking about. Like, I look at it every week. I comment on it or every month, but yet we've never dug into it. And John, I think we tried to make a few connections over time. And thank you for coming on, because this is going to be a great introduction for everybody listening to about what Case-Shiller actually is, what it provides, and what you do for liquidity in that market.
All right. Well, thanks for having me on the show. If I can just jump in, the Case-Shiller Index is a methodology for calculating home prices over time. Much like there was Mr. Dolan and Mr. Jones, there was a Professor's Case and Professor Shiller. And going back to 1990, they came up with a methodology for valuing home prices over time. Theirs is a little different in that they do repeat sales. So the house has to have sold at one point and then sold at a different time. So it's a little different. Every index tries to do things a little different, a little better. But theirs is certainly one of the older, more well-known indices.
John, before we went live, you were talking about fungibility, so to speak, right? Or how many different locations does the index print, so to speak? So
there are 10 metro indices: Boston, Chicago, Denver, Las Vegas, Los Angeles, Miami, New York, San Diego, San Francisco, and Washington that are publicly traded. And then there are 10 other indices that Case-Shiller puts forward. Given their methodology, they only have 20 public indices. But you can imagine that when people do different methodologies like Freddie Mac, who includes appraisals, they have 400 metro indices. And people like Zillow, who kind of use hedonic approaches, value per square foot and things like that, they'll do indices down to the neighborhood level and have tens of thousands of indices. So it depends on who you're talking to.
So if somebody just opened up the Case-Shiller Index and looked at it and saw a report on it yesterday, what are they looking at? What are these numbers telling us? What's the history of them? What can they predict?
Well, they are looking at what's happened. In particular with Case-Shiller, one of the digs on it is that it's a somewhat lagging index. Again, it was put together with the technology that was available in the 1990s. They have very wide geographic areas because they wanted to have repeat sales and have a sufficient number of data points. So they use a 3-month window to try and aggregate data. And because computer power at the time, they lag it about 2 months. So the numbers that came out yesterday morning, and the index is updated every Tuesday morning at the end of the month, represents the information from March, April, and May. So this particular index is lagged 2 months. There were a variety of indices that were released yesterday and every month, from national indices to the one that's traded on the CME, the 10-city index, which is the cities that I mentioned. And then there's contracts on the individual 10 metros. The indices, like most good analysts, are able to analyze what has happened. And there's a lot of people who put a lot of effort into analyzing what has happened because that's where the data is in the past. The trick, the value add in my mind, is what's going to happen, or if you want to avoid what's going to happen, how do you hedge it? And that, whether that's lumber or home prices, that's where a futures market comes in. To your point, there is a variety, much like there are varieties of lumber. The different metros across the United States don't move in sync. There was a lot of building in the South in anticipation of moves, or during COVID, and some of those areas have been oversupplied. Some of those areas are facing dramatic climate change, and as a consequence, rising insurance costs. And so you mentioned Tampa. That's been a real ding on Tampa home prices. But some of the others, like San Francisco, in terms of what's happening in the downtown areas there, that's also suffered. And the traditional quiet cities, the Northeast and the Midwest, have been the ones that have been doing very well. So Cleveland and Detroit are probably two of the best performers in the last year.
John, how can people actually, so from being a Wall Street person, we have a lot of buy to rent companies now. That's something that wasn't around 10, 15 years ago, or at least into the volume they're doing now. Large funds that come in and buy a lot of new homes and create liquidity for some of these big builders to rent. So I guess my question is, who would get some of the most value from the product, since you could hedge your home. You could hedge homes using the Case-Shiller Index Case-Shiller Index. And how would you do that?
Well, you mentioned the buy to rent programs and REITs and things like that. There have been tools around where people could take broad cuts at housing related exposures, builder stocks and things like that, lumber companies. The notion of the futures contracts is that you're hedging explicitly the price in a particular area. So if we use Boston as an example, if you have a house in Boston, in theory, one could look at the futures contracts a year, 2, 3 from now and buy or sell those contracts if you wanted to hedge your exposure. The biggest challenge with the Case-Shiller methodology is, as every real estate agent will tell you, location, location, location. Your house may not move exactly with the movement in the Boston index. So you get into some of the same issues that we were talking about prior to the call about how do varieties of lumber move together or not? What's the basis risk between your house and an index? And not surprisingly, the more generic your house is, the more likely it's going to move by the index. But if you own something that's far out and has 8 bedrooms or 2 pools or something like that, it's probably not going to move.
Yeah, he's got a clown mouth too, where the putting green is.
Yeah. Okay. So that's probably got more basis risk. Speaking Wall Street's jargon.
We do a lot of basis in what we do. So, I mean, anybody that listens to this is probably very familiar with how that basis risk would work based on the actual product versus what's underwritten in that contract. I guess my question would be, is it single units based on, and I tried to pull up the specs on the CME while you were talking, John. Is it based on, a certain square footage in a specific metro, bedroom count? How is that categorized, or is it strictly based on the index number for that metro? And that's it.
So as with any futures contract, having a good working understanding of the reference obligation is key. And these are the Case-Shiller futures. The prices cash settle on the index. So next month, when the August contract expires, people will look up the index that came out that month, and that'll be the value that's used to settle the contracts. So it's an index of a broad metropolitan area. And so if you own
you're talking about Charles.
properties
You're talking about
across
Charles'
the broad
house
metropolitan
now.
area,
That's what you're talking
you probably have
about.
less basis risk. If you have one house, much like if you have one tree, you're going to have a little bit more basis risk.
Do you guys track it down to sort of the granular level? Like in, for example, the San Antonio market, there's different areas, the southern part of San Antonio versus the northern part of San Antonio, or something like Portland where I live, inner Portland versus the outskirts of Portland. I mean, it's quite different. Like just within a metro area, like where Gregg and Ashley live is pretty valuable real estate compared to if you go 35 miles southeast of where they live, and it's still the Chicago region, right? So how does that work in these indexes?
So the indices are 10 very broad, very large geographic areas for Case-Shiller. As I mentioned before, Freddie Mac goes down a little bit more granular, and Zillow can take you down to the neighborhood. But the challenge you have in terms of making markets, you don't want to have 40,000 different markets for trading home price derivatives. It'd be like buying stuff on eBay. You never find the product and who's going to be on the other side, and it just gets to be a challenge. So I think the best way I've kind of reconciled it in my mind is if it is location, 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 at the high level, the homes in a particular area all move in generally the same direction, because guess what? People are moving to the south. There are jobs in a particular city. Interest rates move the same. There's national mortgage underwriting, things like that. And then, yes, there are high price versus low price homes. There's new construction versus secondary trades. There's a distance you have to commute. And these are all things that are second order effects. I think the primary driver, though, when you look at any home price in almost any area, is you can see a huge spike kind of during COVID in certain areas because there's a lot of demand for that. And then during the financial crisis, when things got overlent, there was a huge sell-off depending on, whether there was too much borrowing or a lot of foreclosures.
Do you get involved in like speculation into the future? Is this something that you're willing to talk about, your own personal opinions or your company's thoughts about the future of housing in the United States? I mean, there's some topics we could talk about, like maybe you want to chime in or maybe you don't. I'm just kind of curious, John, what your comfort level is in speaking about, like, say, the next 6 months to a year in general housing in the United States.
Happy to talk about any. In my role as market maker, I am posting the bids and offers. So I have views, but they're bounded by, like, I'll buy it here, I'll sell it there. And either price works for me. I try and maintain as neutral a book as possible, and do not approach this as an opportunity to get very long or very short the markets, so that I always have an opportunity to bid or offer when somebody else comes in. As somebody I think mentioned before, the forward curves have been flattening for the last year. And I think that there are lots of pressures, whether it's economic, political, interest rates. We're 5 years now post-COVID and the change in appetite for home prices. So I think that home prices are probably flattening to have the prices in the contracts imply tiny 1% to 2% year-on-year gains in many of the metros, negative prices in places like San Francisco and Washington,
historical
DC,
chart
for reasons that are unique
like
to
you
those
said
areas.
Before the financial crisis, and then if you look at the long-term chart, it's actually the COVID bump was a tiny bump compared to that and increase. Where we went above trend, pre-financial crisis, low trend, and then we went above trend. I guess that would imply, as you said, is at best flat pricing and maybe overall negative. I have a question about: do you see most of the trading as spread trading between the 10 or 20 market index and an individual metro area?
So let me answer them in order. I think over very, very long times, I embraced the Shiller hypothesis that incomes and rents and prices all move together with inflation. So 2 to 3% over very, very long time seems to be the right move. I think we had a pivot in those graphs in 2020 because people at large demonstrated an appetite for more housing than before, whether it's remote work or just having more space or whatever. So the graphs post 2020 may need a longer time to come back. Mechanically, I think a lot of the prices that I quote on the metros are a function of spread trades against the 10-city index. The 10-city is the benchmark. And so my pricing of New York, Tampa, Miami is how much do I think it's going to do better or worse than the 10-city index, and put in quotes that spread quotes that reflect that. So half are going to trade better by volume, half are going to trade worse, and you just have to have a view on which is which.
And those views can be impacted by politics or natural disasters, weather, climate, whatever other outside factors. Are these just purely migration patterns?
I'd say it's yes to all of the above, but at the end of the day, the most important long-term characteristic, as you hinted, for home prices is demographics. The story I've used with people is, 6 years ago, everybody agreed that Austin was going to need 100,000 more units just to accommodate the population growth. And so 5 guys left the meeting, each deciding to build 40,000 units. The fundamentals are perfectly correct, but you can oversupply a place, and guess what? The supply comes in years after the decision to build is made. So, we're still digesting commercial real estate decisions that were made pre-COVID. I think I differentiate Austin, where the long-term fundamentals are still great, with something like New Orleans, where the long-term fundamental, it's going to be literally underwater in 10, 20, 30 years. Like, a home is great if you say it's the present value of 50 years of rent. But if you're underwater in 20 years, there's no 50 years of rent to collect. And that's something that has an impact on New Orleans, maybe Charleston, New York City, Miami Beach. So these very long-term factors weigh in for long-term prices.
Did you know that Southern Yellow Pine futures launched on the CME this year? These cash-settled contracts use Fast Market's trusted Southern Yellow Pine price assessment as their benchmark. Built on the strength of the Random Lengths new daily Southern Yellow Pine price assessment, this contract helps you mitigate risk and seize new opportunities in the market. Whether you're planning your next move or trading physical products, this tool offers a streamlined solution to meet your needs. Fast Market's Random Lengths price assessments are derived from verified price inputs collected via online submission forms, authenticated physical documentation, and structured interactions with buyers and sellers across the supply chain. All data is evaluated within Fast Market's proprietary assessment platform in strict accordance with our published methodologies. Each assessment undergoes a rigorous 3-level human review and approval process prior to publication. Key benchmark commodities are subject to independent third-party audits to ensure alignment with Fast Market's methodologies and compliance with IOSCO principles for price reporting agencies. It's data you can trust, paired with innovation that works for you. Stay informed and stay ahead. Head to fastmarkets.com/lumbertalk to find out more.
So, John, you're right now, how would people get that are looking to find out more information about this, talk to you about it? How would they contact you and talk to you about it?
Well, I appreciate the opportunity for the plug. So one opportunity is I have a website called homepricefutures.com, and there's some resources page there that walks through what if I want to start trading. And you're going to need to open a brokerage account with somebody who can take your money and advise you and things like that. I am not giving financial advice to anybody, so this is for you and your broker to decide. But I think that I think the big soundbite to take away is that in most people's approach, housing is a very binary decision. You either rent or you own, and it's the biggest financial decision that many people make in their lives. But it doesn't have to be. If you own a house and you're a little bit worried, you can sell a portion of the house. If you're if you're an older person, you can look at downsize. You can downsize by hedging a little bit. If you're a millennial looking to buy eventually, it would have been great if they in 2020 had bought contracts ending in 2024. They complained that prices went up 40%, but guess what? The futures went up 40% also. So I think that the futures allow people to do bite-sized pieces in what is otherwise a very large, daunting, binary decision.
I like that thought. Is there any option trading on these?
No, the CME had options until 2020, but the combination of puts, calls, strikes, expirations, it just got to be
starts, John.
Too many permutations, and so they pulled back from that. Yeah, I think what happens is every time there's an economic number related to housing, whether it's starts or mortgage rates or Fed cutting interest rates or the Dow, the S&P moves 200 points, people can kind of go back and reassess their views on home prices. Every time an insurance company pulls from offering insurance in California or Florida, that has an impact. I mean, it's probably similar to what you have to deal with in lumber. There's always lots of things that could impact future demand.
Yeah, we're living it right now with all the talk on tariffs and cross-border disputes and so forth. I just wanted to make sure too I plug your X handle, which is at Home Price Hedges, and like you have a lot of good stuff on there quite often. I want to make sure people follow you if they're not. And what I will do on the podcast is I'll put it below in the comments in the description so everybody can go to your website and see what your X handle is.
Much appreciated.
So, John, I have a question. We talked about demographics being a big part of. So, going to that point, we've seen a shift from the north to the south in the United States over the last 20 plus years, right? Now, I mean, here I am. I've got kids that are going to be graduating from college and going to be starting to look at buying homes in the next 5 or 10 years. And I'm going to advise them to go back and look maybe to like Indianapolis or Cleveland or Detroit. I mean, Detroit's a beautiful city, right? I've been there many, many times. And if you could get your life started in a $250,000, $300,000 home instead of staying in Portland and paying $500,000 for a starter home, which they can't afford, I feel like mobility might switch back a little bit here over the next 20 years, or do you disagree? I'm just curious what your personal opinion is.
Great question, Matt.
No, I agree with you. All the reasons that people decided to move south 20 years ago because there were job opportunities there and lower priced homes and a lot of new construction turn over time. And now the opportunities are the Midwest has been the most solid home price area. And to the extent, if you have views on climate change, you believe that they're going to be less impacted by what people along the coasts are going to be dealing with. You've got that going for you too. And, the weathers in Detroit and Chicago used to be horrible. But maybe 10 years from now, they won't be so bad.
Maybe. I don't know. I don't know if I'd want to live in Chicago in the wintertime, but I'm old and I like warm weather now.
Well, Matt, what's crazy is in Chicago, in different areas are pretty affordable still. And the license plates I see around Chicago now in homes that have just sold, California, Arizona, which is crazy. I didn't see that until like the last year or so. Why would you want to live here if you're coming from California or Colorado or even Texas license plates, right?
There's something to be said about Four Seasons. I mean, honestly, if you're in Phoenix and it's 93 degrees on Christmas Day and it's sunny all the time, and maybe you get tired of being in sunny all the time. I know. When you visit Texas, Ashley, do people talk about how hot it is there all the time? I mean, yeah. I mean, it is kind of nice to cool down for a while. In Oregon, we have 4 seasons, but we don't really get the snow. That's the benefit of living in Portland. You don't have to shovel rain, right? But the downside is it's gray for 6 months of the year, and that gets on people's psyche. And so, people like me that are getting close to retirement, they look at Phoenix or La Quinta or Dallas as a place they want to go from November through February, and then come back to Oregon for the rest of the year. So, but I could talk about that's just sort of a side note. But I think that the economic situation north and south, like John answered, I think that's going to become more of a reality going forward. Like these are cycles.
If you can sell your house or the house you inherited from your parents in California or New York, the equity in it, pay off the mortgage, the equity in it, you can use to buy a house in the Midwest as is. So you don't really care where mortgage rates are, and you don't really care where climate insurance elements are going to be. And if you don't need a mortgage, you can move to the front of the line.
I didn't realize that this insurance situation has gotten so serious in terms of, you're alluding to climate. And Tampa and places like that. Is that really becoming a big factor in underwriting?
Oh, I mean, it's a huge factor in qualifying people, because people are kind of like, well, mortgage rates have moved from 5 to 6%, and it's changed the payment by 15% or something like that. But the home insurance is either not available and you need it if you are going to get a mortgage, or it's having doubled 5 years ago. It's a really big factor in not only California and Florida, which have been the two main places, But you get tornadoes in Texas, and you get hail in Iowa, and more and more of the country is being impacted by weird climate. You see all the flooding in the last couple of months.
Yeah.
And the insurance companies, no surprise, are adjusting their models dramatically to increase the premiums.
Huh.
Matt, to answer your question, when I'm in Texas, most people say, why do you want to live up in Chicago? But
well, you've lived in both Texas and Chicago, so you have an answer for that, don't you? Let's hear it,
I prefer not to have 100 days of 100. That's just my own opinion. Instead, I'll take 100 days of below 30. But so, John, I just had a question. How did you get into this? I mean, you have a pretty interesting background, I think, from what you told me, like what you did, what you do. Like, how did you get into being a market maker for this?
So I had a Wall Street career, and after the financial crisis, I got into the expert witness work. And with any kind of litigation, it's like, what did they know and when did they know it? And the in that part of the world was when home prices were going to fall. When did everybody know that home prices were going to fall? And I remembered that there had been a futures contract. This one had been introduced in 2006 and started dabbling in it. And the CME saw me kind of put more than one or two bids in and said, guess what? All the market makers have disappeared. The firms have closed, whatever. Would you like to be the market maker? And I went, sure. If I'm going to be taking the risk, I might as well get people to give me the phone call. And so I started that in 2010. And it's been my kind of, if not pro bono, my effort to kind of create this public good for the community, because I think the housing community needs something like this.
So you were the whale inside the contract, and they just made you be the guy that makes the market.
Well, it's talking about big fish.
You traded your way into a job. Way to go, John.
It was a very tiny pond at the time.
So that's a good story.
I left. I left in June 2007. So I had our firm got sold, and I had a chance to move on, and so my track record's pretty clean.
Yeah.
But the thing is, in terms of doing the expert witness work, I could talk about it because I wasn't involved in July, August, September 07 and all the conservatorships, Bear Stearns and Fannie, Freddie, and Lehman, and all that stuff.
What are your thoughts on the idea of interest rates being lowered here over the next 6 to 12 months, in your opinion, and how that might help or hurt housing?
I think housing prices are probably more independent of interest rates than some would have you believe. People think that if you reduce interest rates 200 basis points, you're just going to create this boom in housing. And I think the conditions that would require you to lower rates by 200 basis points may not be favorable to home prices coming on. I think whatever interest rates are, you got more supply than you need in certain areas. You have more climate risk in some areas than people have been used to. And it will take some time. I also think there's more and more people who are buying homes with either with very very small mortgages or all cash. Yeah. You mentioned the buy to rent program. I don't think those guys are impacted by where residential mortgage rates are. They borrow in the corporate
What's
market.
your view on the energy or the idea of privatizing Fannie and Freddie again?
You need another expert. It's a great topic for a future podcast. And
good answer.
John's talented, man. He's lawyered up.
Yeah.
Hey, I live in DC. I know.
He's smooth, isn't he?
He called out Charles's state. He said Charleston's going to be underwater in 20 years. You're screwed, Charles, if you got a vacation place down there.
No, I don't. Luckily, I don't have your kind of money, Matt. I'm just trying to figure it out. Still wet behind the ears.
I'll tell you.
Women over here because I'm younger than you.
A quick aside about Charleston. There was 10 years ago, I was toying with the idea of maybe moving down there. And so I got on, I think, Zillow or Redfin, one of those websites, and started looking at, homes in the Charleston area. And I was shocked because there's two distinct levels of homes in the Charleston area. There's the old Southern, beautiful, ornate homes that go for over $1 million. And then there's everything else that sells for like 500 to 400. It's like, there's no middle. It's just high end or medium. And it was like, it kind of blew me away because that's not like that here in Portland. I didn't realize that those southern, big, beautiful mansion, they're not mansions, but they're southern homes from the 1800s, early 1900s were that valuable to people. So interesting market down there.
Historic homes do get a premium. It's not in
Oregon. They get torn down.
Well, torn down or burned down, Matt? Which one is it?
And I wanted to just tell John, thank you for coming on. We were going to jump into the lumber section now, and I think we'll take you up on potentially having you on every now and then when the report comes out. Well, thanks again, John.
Yeah.
Perfect. Look forward to it.
Great having you, John.
Thanks.
Thank you. Really good stuff.
We lost Charles.
Thanks.
Well, there he is.
I'm here. I had to go I stay over caffeinated, Matt.
I thought that was pretty cool. The fact that buying little increments or selling little increments of your home. I
had no idea. I mean, I just learned a lot here in the last 25 minutes. That guy.
But that's why I didn't have anything to say.
That guy's really smart. First of all, he's also got a unique understanding of an instrument that I don't think most people are even aware.
No, that they're not. People will go out and buy and sell Bitcoin and take all kinds of risk on that. But yet if you tell them you can look at hedging part of your house, the buyer or the sell side, they look at you like you have four heads, right? But that makes
Ash, that's not sexy. That's why.
One thing that he said that I thought was really interesting is his business model. He's pretty much 50-50 long short all the time. So our business, there's people in our business that are short most of the time. And then there's people in our business that are long most of the time. And they really don't commingle all that much. You don't see a lot of traders that are like 50% long, 50% short. I think the closest you're going to get to that would be somebody like Gregg, me, Ash. I don't know if Charles, if you do a lot of this or not on your inventories, but we do basis trades against our inventories, and we literally use the futures board as an instrument to make a good trade, right, or to hedge our inventories. And so there, in that case, and I'm always long and I'm always short, but he talked about it as though he's 50-50 all the time. And I'm surprised because
he's a market maker too, right?
He has to.
Yeah. So he
has to keep a pretty flat book.
I think that's the nature of a market maker.
It's like being a bookie. You want to have equal action.
The guy
on
was
both
fascinating.
sides.
I mean, it's just a different world that he's in.
It was pretty.
Are you still relying on snail mail publications from the 70s to reach the forest products industry? It's time to upgrade. Advertise in the Lumber Word podcast and get in front of the lumber world every single week. Our episodes are tuned in by the largest segment of influencers inside and adjacent to the forest products sector. Decision makers who shape the industry. Ditch those tens of thousands spent on outdated print ads and project your product or service across the podcast universe instead. Ready to make the switch? Head to thelumberchannel.com, click on Connect, and drop us a line with your info. Let's amplify your message today.
To your point, Matt, if you think about it, is like, who's short all the time? It's like the end users, they're always net
and
short.
The mills are always long.
Right? And who's long all the time? Mills are always long. They're always long. And then, there's all of us in the middle that are kind of long, kind of short, mostly.
You guys want to talk?
Mostly distribution is always net long.
All of a sudden, your picture looks so much better now.
Yeah, maybe just having 5 people streamed in, it just was breaking restream or something. I don't know, but hey.
Yeah, I was
I don't know what it was. Either that or somebody just turned off a movie at your house.
Yeah. Yeah, your download's finished.
Pretty. Stop watching that
So
porn.
I do want to talk about lumber a little bit here because I'm confused. Like I am trying to figure out. I'm spending half my day talking Gregg off the wall, and then the other half trying to figure out what's going on. Off the ledge.
Off the ledge. Not the wall. The ledge.
Normally we sell a nice chunk of trucks every week. We have our goal and we generally hit it or above it. And we haven't sold a lot of lumber this week. We've thrown numbers all over the place. We've put numbers on trucks. I know people are buying them. Are there's some distributors or wholesalers out there? Random Lengths came out 15, 18 higher on some items, 4-inch. Most mills have raised their price, 5 to 20% in the east and west part of Canada. Now somebody's floating the rumor there may be another 15%. If there's not an agreement, what's going on out there? Who's getting the orders, and who wants to start?
Well, I guess it's kind of like, get a good feel for it. It's like what's going on at U.S. Species and Southern Pine. Since those are not impacted by any of that stuff, maybe that's going to give a better indication of what the real market is. That's
a good point. I mean, we talked to the one mill that's got both sides of it, and one of the traders said that they had to sell 4-point-something million feet a day of pine to stay even. And, on Monday they sold 3 million feet, right? And so, and I see, the U.S. species pricing, and just everybody look at, if there's a hem fir mill out there that wants to sell me hem fir during the delivery cycle of September, I'll give you significantly a higher number than the cash market is today if you can hit a futures tally. There, throw that out there.
Is that because September's currently trading $100 above the current price of hem fir, white fir? Is that why?
That's exactly.
Well, do you want me to talk about that now?
That's $10,000 a car above today's price.
We would love that.
That's not true anymore.
Oh.
Whoa! Newsflash!
Oh.
Hey,
curveball.
This is where the guys that are on live get a bonus, right?
So I told you guys last couple of weeks that there's going to be some room for Western Species to occupy the space created by the new 15-20% higher price points that the mills are going to try to attain in August, right? And that this would all settle out sometime in September. And now we're seeing we're in the first inning now of that actually occurring here yesterday and today. I have some real world, and I am busy, Ashley. Unlike you said you're not as busy. I'm much busier than I expected to be on rail cars. I'm not as busy on my truck business as I expected to be. I mean, I'm not doing terrible, but my truck business is just putzing along.
Okay.
But my car business is increasing here day by day. And so the price of 2x4 lumber, whether it's hem fir, whitewood, ESLP, hemlock, white, Doug fir, 2x4 specifically, it's going to start with a 6 now in Chicago. We've sold at 610 Chicago, 600, 605, multiple cars. So and then we sold some spruce today for really fancy tallies, lots of 16s, 18s, and 20s. We sold that like 690 or something in Chicago. So there's some things happening in the car market that are bringing the value of Western Species up. I'd say probably 5% to 7% in the last 6 or 7 trading days. And not that there's a stampede of orders, but the order flow is good. It's not tepid. It's decent to good. So I don't know how that's going to affect the price of my inventory on the ground in Texas, but I'm inclined to think my wood is going to be worth more in the future. And since I'm short the board and losing, my incentive is not to just sell my lumber for less money going forward either. So I think there's some resiliency in Western markets right now. And I think if you're somebody that holds wood on the ground like you or Charles or Gregg or me, you're going to tend to be more patient to try to get your number and then even bump prices, because that's what the mills are doing in the West right now. They're moving wood at higher prices.
Hear you.
And they're moving wood.
That's still a $75, $80 discount.
So
there's room to go up next week.
We're not going to
sell all our wood.
I'll give some mills today if they can hit my delivery cycle in September and the tally 645 Chicago. on coastal hemp fir if they can do the futures
It's like
pellet.
$30 to $40 over what they're over what the mills are selling for today.
Yes, I will do that. If there's a hemp fir mill listening,
we can talk. Well, I'm a hemp fir mill. We can talk about this after
Well, we need somebody to actually do it, though, Matt.
Well, I want to have this conversation privately because there's something else that I need to talk to Gregg about.
Okay, we got to take this. We got to take this off the pod.
No, it's fine.
No, it's fine.
No,
you guys can talk. Like if anybody from somebody else is listening, you guys can do that. But there is something else that I wanted to talk to you, Gregg, specifically about. So.
Okay.
It was just because we had a guy outside of the lumber industry, a guy that helps me with my charts that isn't in the lumber business. He calls me this morning after working out and goes, "What's the price of coastal hemp fir to Chicago?" And I'm like, "Why?" He goes, "It's really big basis." There's a guy out that doesn't trade lumber. And I'm like, okay. I go, if you listen to our podcast, we've been talking about this for 3 weeks. Anyway, Matt, that's great. And Gregg, that kind of makes a lot of sense with the truck business versus car business right now. That was Matt. That's huge information. That's really good information.
I have a question though. If people are buying cars, you have time from purchase to actual receipt to inventory to consumption, right? Like it's not a 4 or 5 day window here, right? So we're talking probably 3 to 4 weeks. Is that a fair assumption before it actually gets used?
6 weeks.
So okay, 6 weeks. Okay, so let's call it 6 weeks.
It's 2 months, I think, is how I look at it.
So then really what that tells me is that the market sees something happening in September, not so much anything very much over the next 30 days, because they're trying to price protect themselves against whatever's going to happen with the additional hubba or whatever you want to call it that's going on with the cross-border relationships.
I think that's the proper term for it. The hubba.
Yeah, I thought so too. It's very banker-esque. So, being that I live in a truck market, that tells me that we're probably going to be pretty soft over the next 3 weeks. And we're already experiencing it. I mean, mills are doing the same thing on the east side and in the south. They're selling wood and bumping, but when they bump, nothing happens. There's no follow through.
I mean, I just think that this is more the reason why the West is probably getting some better 2x4 orders. It hasn't really helped us on 2x6, Charles. So it's really specific just to 2x4. Really, I just feel like some people are willing to swap out species, and even if they get a little bit more cull because of their fear of him for twisting or curling or whatever. I don't think that's really an issue anymore with modern technology of how hemp fir is dried and cut that it was 30 years ago. But anyhow, I digress. The 2x4 market is just filling a bit of a niche that the spruce guys would probably have held if they weren't trying to get the extra 15 or 20%. And they're just hedging their bets. They're not going to buy nothing but hemp fir going forward. They're going to buy a little bit, But then in the long run, yellow pine you've talked about tremendous growth opportunity because it's continually the price leader in the clubhouse. It's always the cheapest species in North America. We used to joke, Gregg and I and Ashley joked about this for years. If spruce is the cheapest species on planet Earth, shut your eyes and buy everything. It's like, it wasn't like it was hard to figure that out.
Yeah.
Well, now yellow pine is the cheapest all the time. And, I don't know what else it can do besides find new markets to gravitate into, especially on the 2x6, part of it.
I agree with you 110%. And I think you keying on the fact that people are looking at some of these whitewoods and hemp firs and all these exotic species for us Southerners, instead of the traditional spruce stick, is really ringing true to how versatile people's mindset is becoming, right? Whereas we're kind of getting away from, this is how we've always done it, and people are understanding the risk profile associated with being stuck in their way. So I think that's a huge benefit, what you just identified.
Hey, Gregg, question, because I think you have some inside information about this, but the European lumber, we just did a European deal, right? At the federal level. And so how's that going to impact the European imports coming in, your understanding, and then beyond the trade deals that we're doing, what's the appetite of the Europeans to bring more lumber over here at these prices that they're seeing in the CME and that they're thinking about going forward.
We got some probably pretty current information. We had dinner with one of our European suppliers last night. Nice steak place, and then we actually had a call this morning with another one. And I mean, I think if I ask you chirp in here, really generalize. Log prices continue to be high. Business is a little volume are on the lower side. How that way the shipping lines are their schedule bumping things, like looking for additional loadings.
Gregg, one thing they said also was the pine prices have climbed up because they heard on our podcast we were talking about a lot of pine coming in on the euro. They were doing that simply because pine was like 20, I don't know what the 20 some dollars per whatever nomination they use cheaper. It's not anymore.
Metric ton.
Yeah.
Metric ton. There was one, it was kind of interesting as somebody asked me about, well, now there's a 15% duty on, everything from the EU, does that apply to lumber? And, my thought was, well, there's a zero now, and there's items that are quote unquote 0 for 0. And so maybe lumber is still that. At least one person has said, no, they think there's 15% on European lumber. And if that's the case, Matt, that's how much comes in. All today that there are people, fine folks, that are expecting on Friday that there's going to be additional tariffs on Canadian imports under all of the above. Everything's going to be 10, 15, 20%.
Above the current CVD.
Above and beyond everything. And I mean, I guess when I look at that, Matt, to your point, I'm hedged and I'm saying, wow, I can't sell my current cash within $50 of the board, right? And yeah. I own items that I look at and I go, wow, they're really undervalued relative to 2x4. And I say, and I go, well, I'm trying to think, what am I missing? And maybe I'm missing nothing. It's the end of July and not the end of August, and that I just need to be patient, and that basis is going to work. To your point, either cash will continue to move up to that price, or at some point futures will come down.
I mean, this is what we dream of, huge basis. This is it allows you to do so much. And as long as you can get your mind right about potentially taking a 6-figure loss on your hedge, the reward is significant on the other end, right? And
I'd love to take a 7-figure loss on my hedge. That'd be great.
I'm just saying, it just, I remember having that conversation one time with a guy, and of course, well, why did you do that? Well,
didn't you know the market was going up?
Because that's what you
didn't do. You know that?
I wish we all had the benefit of foresight, where I could look out 6 months and know that a pandemic was going to hit and we'd have supply shortages. I wish I could have just known that.
So in conclusion, hey, Charles, so pine prices are up like $5 to $10 this week ish.
Yeah, and they're testing waters. They're doing the same thing that Matt's talking about. I mean, they're selling wood and bumping and running. If there's a problem, they get rid. They're trying to be a little bit more proactive, and if they have an issue, they're trying to get rid of it. But I don't think too many of them have very big problems. But we're still not in a situation where we have 7 to 10 day order files. Like, we're talking 5-day shipping windows, right? And
the prices that coastal hemp fur is trading at, that would say it's like up about $15 to $20 from the printed index price. Is that like,
is
that for wood?
for
ahead.
2 weeks out, or sooner, for 2 before. It's just 2 before. It's not, it's not really helping us with 2x6 and wider at this point.
One thing we did run into, Matt, was anything 2x4 8-footer on the East Coast, hem fir was undercutting it, but not on 9-footers. Does that make sense?
Nobody has any hem fir 9s in the West really to speak of. I mean, there's a car here and a car there, but 9-foot everything. Doug fir, hem fir, spruce, ESLP, Western species is the tightest thing out there. And
damn, even 9-foot finger joints getting tight in Texas, I heard.
Yeah, don't get your hopes up, Greg.
Oh yeah.
Man, I just think
I'm just waiting for us to. I'm just waiting for us to sell our last truck, and then the market will be like. Then the market will be like, giddy up. So that's all it takes.
That's how it works.
You just got a few more to go.
That's how. Man, I was just listening to everything we were saying, and man, we give away a lot of information on here. If somebody just listened to this, like, it's crazy, right? I don't know. That was just. I mean, food for thought.
At the end of the day, all this stuff that we're talking about, rising prices and futures markets closer to 700 than 600 and all basis trades and blah, blah, blah. None of it's really going to make that big of a difference in the long run if we can't get demand at the building end. So you've got, where does demand come from in the wood products business? It comes from the retail side, that your Home Depot and Lowe's, the walk-in trade.
Mm-hmm.
That's a third, let's say. And then you've got your industrial. We don't talk about industrial business that much, but industrial lumber is a third also. And then your home building is the other third. And so, there's issues with retail. It's not growing. It's not going down. I mean, they projected flat growth this year, and that's pretty much what it's been. It hasn't gone down, hasn't gone up. It's just kind of stuck. And then industrial's down, for year over year, for sure. And then, the lumber, the builders, I would say flat at best. And the tea leaves tell me that the future of the spec building, whether it's apartments or single family housing, is flat at best. So where's the growth going to come from for the next year and a half? I don't have an answer for that. And I'm a little nervous, but then you talk to some other people and they're real excited about 2026. I'm not sure why. I don't want to be a curmudgeon. I'd like to actually hear some information that makes me think, hey, I should look forward. It is going to get better.
No, I've been pretty clear, Matt. Demand's not getting any better. For the foreseeable future. There's nothing out there that's going to, single family is going to grind along at best sideways. Maybe if there's a market segment that can improve significantly, it would be the industrial. If you think about all the investment that's going into, building new plants and equipments and all of that stuff, maybe the industrial side will improve somewhat. But, home center, flattish. There's nothing that's going to really drive that. I mean, it's, I will say positive side, GDP in the second quarter was up 3%. So
yeah. And so how does that fit into the
Home Depot and Lowe's, their sales kind of go along with, GDP.
So does that lead into the idea that a rising tide lifts all boats? I mean, if we have 3-4% growth in this country and it continues, aren't people going to start spending more money eventually? They'll have a little bit more disposable income. Their wages will rise. And, it seems like we've got inflation relatively under control here the last 6-8 months. I don't know.
I think we're looking for an extended period. I think we're looking at an extended period of time on, a nationally average flattish house prices, and then we got to dig into the markets like Case-Shiller and which markets are going to be better, which are going to be worse. But housing affordability is still is a big issue, and it's going to take time for those incomes to catch up, right? To the point that, hey, there's two ways affordability gets better: the prices fall, or interest rates fall, and
or real income rises.
real income rises, so that improves that. Exactly, Ash. So those are the three levers, and of those three, we probably have the best chance of, time favors the prices moving sideways on the prices, and income's growing. But the not demand. We're going to be demand challenged at least through the end of this year, and maybe into the first half of next year. We're going to continue to be in supply push markets.
Gregg, you mentioned something today. I want to throw it to Matt and Charles, and you threw out a lot of people feel that with the way the Canadians are pricing their wood right now and the market's moving, that they're feeling in a large chunk of the market out there is the prices aren't going to do anything for 3 weeks and then they're going to crater.
I love the way you called me out when I said everyone.
Well, I just returned the volley of what you say when I say everyone.
Every time Ashley comes in and says everyone or no one, I go, okay, that whatever you're going to say now means nothing, because once you start with that, it has no credibility.
I go, who is everyone? And he goes, the people I talked to. I go, you didn't talk to. I go, you didn't talk to too many people yesterday. But no, back to the question is.
But the two people I did talk
to. Do you feel that way still or not? As far as overall price movement of lumber over the next 30 to 60 days, when the Canadians come back from holidays, are they building an inventory? Will they have to sell, or are they just going to dig in so much that people are going to have to come in and pay the price?
You asking me, Charles, or
I'm throwing it out there.
I thought you were asking Gregg.
Yeah, Gregg, what do you think?
Yep. Yeah, it's going to grind higher. I don't know. I think I'd said last week that I thought that September 2x4s would be closer to 600 than 700, that they're going to be closer to 700 than 600.
Okay.
Oh.
I'm bold up today, Ash. I'm bold up.
Bold move, Cotton.
No doubt.
I tell you, I want to say too, Charles, he does trade a lot of futures through. He's known as the EFP king of Southern Yellow Pine studs from the word on the street.
Hey,
he's going to be. They're going to hire him to be the market maker, like that John guy. He's the whale.
Yeah.
No.
All right, boys. Well, we're almost up against an hour here, so I thought that was good having John on, and we got to bring him back and kind of.
I learned a lot.
Keep an eye on stuff.
That was great.
That's interesting stuff.
Actually, really getting some people from outside the industry that are related to our industry but not directly involved in the trading of lumber is good. Look, whenever you can be learning and be curious about the world and how it works, there's a much bigger world out there in the housing business, in lumber business than what we know, right? We're very specialized. Gregg, on that note, is there any chance you can get your buddy from Northwestern, Brian, back on?
Yeah, I pinged him. He's actually floating down the Grand Canyon with his boys this week. So yeah, maybe in the next week or two, he said, when he gets back. Mm-hmm.
All right.
I just pictured.
Well, thanks for having me, you guys.
I pictured John coming on today, not knowing what to expect, and saw us four sitting here and said to him in his head, "Boy, I'm going to have to really slow this explanation down."
I know he was probably like, "What have I got myself into? What a bunch of dorks!"
All right, guys. Hey, sorry about the internet. I'll try and fix it for next week. Cheers.
See you guys.
All right, guys.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.